The hidden rotation happening inside the U.S. stock market right now is one of the most important stories that most investors are completely missing. On the surface, everything looks fairly normal. Major indexes are moving. Headlines are focused on inflation, interest rates, and big tech earnings. But underneath that surface, money is quietly shifting in a way that could shape the next phase of the market. To understand what's really going on, we need to zoom out for a moment. Over the past couple of years, a small group of mega-cap stocks, primarily large technology companies, have been responsible for a huge portion of the market's gains. These companies became the center of attention due to their dominance in areas like artificial intelligence, cloud computing, and digital infrastructure. Investors piled into them because they offered growth, strong balance sheets, and a sense of safety in uncertain times. But here's the key point. Markets don't move in straight lines forever. Leadership changes. Capital rotates. And that's exactly what appears to be happening right now. What we're seeing is a gradual shift of money away from those crowded, high-performing names and into areas of the market that have been overlooked or undervalued. This is what professionals call sector rotation. It's not a crash. It's not a collapse. It's more subtle, and in many ways, more important. So where is the money going? First, we're seeing renewed interest in cyclical sectors. These include industries like industrials, energy, materials, and financials, areas that tend to perform well when economic activity picks up or when investors anticipate stronger growth ahead. After being ignored for a long time, these sectors are starting to attract capital again. Second, small cap and mid cap stocks are quietly gaining attention. For a long time, these companies lagged behind large cap giants. But now, as valuations for big tech look stretched, investors are beginning to search for opportunities elsewhere. Smaller companies, many of which are more sensitive to domestic economic conditions, are starting to look more attractive. Third, there's a shift happening within technology itself. Not all tech stocks are moving together anymore. Instead of broad buying across the entire sector, investors are becoming more selective. Some areas are cooling off, while others, especially those tied to real earnings growth rather than hype, are holding up better. Now, why is this rotation happening? There are a few major forces driving this change. One of the biggest is interest rates. When interest rates are high or expected to stay elevated, it tends to put pressure on high-growth stocks, especially those whose valuations depend heavily on future earnings. At the same time, higher rates can benefit sectors like financials, which can earn more from lending activities. Another factor is valuation. After a strong run, many of the market's biggest winners have become expensive relative to their historical averages. That doesn't mean they're bad companies, but it does mean that future returns may be more limited. Investors know this, and they begin reallocating capital into areas where they see better value. There's also a psychological element. Markets are driven not just by data, but by behavior. When everyone is crowded into the same trades, even a small shift in sentiment can cause money to move quickly in the opposite direction. And here's where it gets interesting. These rotations often happen before the broader market narrative catches up. By the time headlines start talking about it, a large part of the move has already occurred. So what does this mean for you as an investor or someone watching the market? First, it's a reminder that focusing only on major indexes can be misleading. The market isn't just moving, it's evolving. What worked yesterday may not work tomorrow, and the investors who succeed are the ones who recognize these shifts early and adapt before everyone else does. If you understand it early, you're not reacting, you're positioning. And in markets, that difference changes everything.